You're watching Newsfeed AM. Well, let's give you the local markets now and hoping to chase those lost gains this morning. On Friday, the rand strengthened against the US dollar. In the United States, non-farm payrolls rose less than expected in June. Meanwhile, the unemployment rate dropping in June. Simon Brown is JustOneLap founder, joining us now for a quick market analysis. So, Simon, while remarking on that scarf, I think you've certainly heeded the call to bring out those thermal vests. Let's talk about the quick overview on the markets and how they're faring this morning.
Morning, Polly. So we've actually opened quite red this morning. The overall market, the top 40, down 1.25%. That's been mostly driven lower by resources. Notwithstanding, the commodities themselves are actually a little bit up on Friday. The rand a little stronger, but the resource index down 2%. The industrials down 0.8%. Financials down just under 1%. So pretty much, I mean, my screen is just red. We've got the rand at 18.82 against the dollar, so a little better there. 24.09 against sterling and 20.61 against the euro. Quickly on commodities, gold 1,930, Brent 77.90, and platinum 911, palladium 1,233.
Let's talk about the commodities. Oil prices dipping in Asian trade this morning as investors thread carefully before the fresh economic data from the top consumers. That's the US and China this week. Talk us through those developments.
Yeah, so there's a fair bit of data. You mentioned the jobs data last week in your intro. We had Chinese inflation data out this morning early, 0% inflation for June year on year. But China's inflation data is a little weird, so US is due later this week. There's going to be a lot of watching on that. There's other bits of data too, but that US inflation number, concerns are if it doesn't continue improving, it was 4% for May, if it doesn't sort of continue trending down, then Jerome Powell, Federal Reserve, we could see a lot more rate hikes coming. Expectation is we've probably got 0.25% rate hikes from the Federal Reserve in their next two meetings. But we get into that crunch point, which is when do they stop? When do they say, that's it, we're done, we can start talking about rate cuts, even if they're 6 or 12 months away?
Yeah. Well, you're going to have to indulge me on this one, Simon, because it's a bit complicated. After a consortium consisting of AfriFund Investments, Axion Telecom, and the Government Employees Pension Fund, they've submitted a proposal for a controlling stake in Telkom. The Telkom board, on the other hand, deciding not to continue with these discussions with this particular consortium. Now, there are talks of a hostile takeover. Talk us through these developments.
I mean, Paulie, you must remember, this is the third deal, right? There was MTN, then there was Rain, then there was this by the former CEO. Board has said, thanks, but we're not interested. They terminated the Rain one as well. MTN terminated the initial deal. But now you've got to ask yourself, is there value in Telkom? It's a share price that was 100 Rand within the last couple of years, trading down just above 20. They've got SwiftNet, which they were going to list last year. That, of course, is their towers business. They've got a whole bunch of properties within the stable as well. And, of course, Telkom Mobile, which is 18-odd million customers and profitable at that point. Mm-hmm. So hostile takeover is, instead of going to the board and saying, please approve it, you go directly to shareholders. You bypass the board. We've seen a few on the JSE before, not many. From an outsider, it's a lot of fun as you watch the hostilities, but for those involved, it's hectic. It's not much fun for them.
Yeah, well, we're going to have to see how that one ends. Let's conclude with this, Simon. Diageo South Africa, this is a subsidiary of a British liquor company that's emerged victorious in a High Court appeal on the lower excise tax rate, which it will pay on its Cape Velvet cream liqueur. What's happening here?
Yeah, so this is about a decade ago. SARS, because of course we pay tax on any alcohol, and the more alcohol, the higher alcohol level, the more tax we pay. So whiskey's more than wine, wine more than beer, and that we get, and that's been around forever. About a decade ago, SARS said, hang on, what about cream-based liqueurs? And they actually dropped the excise duty, the tax payable on those particular products. And of course, this Cape Velvet cream liqueur was perfectly in that. But then SARS said, hang on a second, you're using vanilla essence in the manufacture of this, and this contains a minuscule quantity of alcohol. Now, I didn't know that vanilla essence had alcohol in it, and the minuscule quantity is, I'm not going to read the numbers because there's so many zeros, I fall over them. But ultimately, what's happened is that SARS has lost this. And they said, you know what, there's a small amount of extra alcohol being added, but they still get that special tax rate as a cream-based liqueur. So it means it's basically cheaper on the shelves for consumers, which of course is then good for the company who's able to sell more.
Simon Brown, how's that for a layman's explanation of what's going on here? I couldn't have put it better. That's why you are the expert, Simon. Thank you very much. Simon Brown is JustOneLap founder.